There we go. Whoa, whoa, there we go. We got volume. All right, sorry about that, guys. Had to mess around with the volume here to get it working. Oh, man, I'm Chris Franks with Texas West Capital coming at you live from the Houston, Texas area. Glad to have you all checking in. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 20th of, what is it, September 2022, right? Good to have you all here. Man, tomorrow's a big day, right? The big rate hike day. CME FedWatch Tool has the markets pricing in a 75 basis point rate hike. There's like 11 to 14% chance of a 100% or a 100 basis point rate hike, but I don't think we see that. I think anything other than 75 will surprise the market. So higher or lower, I think it'll surprise the market either way. So we've got that coming in, and we've got we got the markets kind of interesting at the moment. Bitcoin refusing to kind of go down any further right now, getting a little bit of rally, getting a little bit jumpy. We got some possibilities with the indexes as well, stock indexes as well. The dollar, potentially topped out or very nearly so. Bonds looking like, I don't know, bonds look like they got maybe just a little bit further to go before they're done. So, we could see a little bit more negative movement in the markets, and Bitcoin or the dollar maybe getting a little bit slightly pushed higher. But I think for all intents and purposes, it seems like we may be just about done with the direction we're going. Now, that said, until we actually get the breakouts of the levels I'm going to talk about today, your default thought process should be the continuation of the trend, right? Just because there's a possibility that things may be different doesn't mean it's going to be. You've got to get that move through those validation or invalidation levels. So we'll talk about that today. As always, you guys can join us here at howtotradetowin.com. We'd love to have you there. Lots of education, well over 200 hours, probably closer to 300 hours these days. Video education, emphasis on Elliott Wave, Wyckoff, and lately price action. So we've got all of there, and then there's probably like 50 plus different strategies, systems, trading systems that I've taught over the last couple of years in there as well that you'll get access to. It's all in Tier 3 and everything else we do there. So we'd love to have you there. Join in if you'd like. Who else here already? We've got Bamboo. What's up, man? Thank you, sir. I appreciate it. Yeah. This move has been crazy. It's the move that just won't stop giving, and not in a good way. Seems like anything that can go wrong has gone wrong. So hopefully we'll get the rest of our stuff today, and then becomes all the unpacking, right? But, it's lakeside living, so that's pretty nice. Not too bad. Bill, what's up, man? Trying to return to normal after the funeral yesterday, huh? Think Bitcoin may be in mourning too? God save the Queen, right? HJ, what's up, man? Brian Riley, good to see you. Let me see here. Just reading Bill here. Deadly123, what's up, man? Let's see here. Oh, man, I'm sorry you lost your father this weekend. Definitely sorry to hear that, man. Man, I wish you the best, and hopefully, things are okay over there. That's awful. It's tough to lose somebody. So I'm sure we'll all be thinking about you, man. Let me see here. Data, what's up? Good to see you. He says, good trading is like looking for your phone. Most of the time it's in your hand. Right? That's right. It's all about that risk management. The only thing you control in the markets, right, guys? How much you lose. Wazobia Dollars, what's up, my friend? Good to see you. Baltazar checking in. Hey, Deadly, man, I appreciate you too, buddy. All right, guys, so let's see here. We'll see if we can get through this. We've got Bitcoin first, right? Now, it's gone up further than I thought it would. I figured we might have a fifth wave down here. I figured we had like a 1, 2, and then maybe like a 1, 2, 3, 4, 5 gives us 3, 4, and 5. But now, it doesn't quite look like that, right? So it looks like, well, what does it look like? Well, we'll see here. We'll see if we can get this breakout. What we're looking for is a breakout above wave B here. 19,588.20. If we can get that, that keeps the black count in play. Black count suggests maybe a 1 and a 2. Complete or, nearly so coming down here. Let me see here. I guess that could be an ABC. So it could be a WXY. So A, B, and then 1, 2, 3, 4, 5 gives you W. Then maybe X. And then 1, 2, 3, 4, 5 is A, B, C for Y. Let's see here, because this is one. Looks like we could have 5 waves up, or 1, 2, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 still going. So yeah, so this may just end up being a WXY right here. Right there at this, you'll notice it's right there just beyond the 61.8 retracement there, guys. So, this is the 15-minute chart. We got the rally, we got the breakout above the 15-minute, but we do need to see a breakout above wave B. If we can do that, and the bullish count is in, well, our wave 3 is going to change there. Let me kind of get that changed because I had that based off the 70.5 retracement here at the S1 pivot. So this will give us a wave 3 up here at around 21,096, which will give us then a wave 5 right up here at the daily pivot. So, I mean, that makes a lot of sense, right? 21,644.60 or so. So, yeah, I mean, and this is that large, we'll zoom out here in a minute, but this is that large descending channel resistance. So, again, 5 waves up into that. So, that gives us a 1. We pull back for a 2, and then 3 is the breakout, right? The strong wave does the breakout over that major resistance, right? Or down through major support. That's what we usually look for, right? Let me see here. Tell you, Router, what's up, man? He says, just call Bitcoin the Euro USD for now. If you drop DXY on the chart locally, it's just the inverse. Yeah, well, yeah, and it makes sense, right? I mean, if we think about it. So, if you think about the DXY, right? And so we know that the Euro USD makes up about 58% of the weighted value of that, right? So the DXY is almost, most of the time, a pretty close mirror representation of what's going on with the Euro USD, right? So if we think about that, and then we consider that when money is coming out of the dollar, so when the DXY is dropping, it's going into riskier assets, right? Risk on assets like stocks, like Bitcoin, stuff like that. Well, then it makes sense, right? Because as the DXY drops, the Euro USD is going to rally. And at the same time, that money coming out of the dollar goes into those risk on assets, again, like, the stocks and Bitcoin and stuff like that. So, yeah, so it makes sense that you're going to follow a pretty similar path when it continues to move with it, right? So, yeah, good catch there. But, yeah, that's exactly why we would expect to see that, which is why I keep telling you guys, I know everybody's like very, it's the end of the world and everything, but at the end of the day, until the dollar continues to break out higher, there's still the quite real possibility that that Bitcoin's potentially bottomed, right? And stocks may have bottomed. Remember, this is the guy here. I'm the guy that for years here has been talking about, okay, we're coming up to this top that we came up to, right? And talking about that potentially being, the signal that, hey, there it is, new depression coming in, right? But over the last few months, I've been talking to you guys about the price action and what's going on, and things that aren't making sense, right? If we're just starting, we'll look at the NASDAQ here, the composite, right? If it's just starting its wave 3 down, wave 3 of A, right? But tech stocks have already dropped back 70, 80%. That doesn't make a whole lot of sense, right? I mean, how much sense does that make that we get that huge drop with tech stocks and the tech index basically is just starting, right? Now, I'm not saying it can't be. I'm not saying something can't play out, but it just, these are things that should have you thinking when you're looking at. So, again, we're looking at the possibility that maybe the pullback with stocks, with the indexes, is maybe this wave 4, right? And maybe we've got a wave 5. Maybe we've got wave 5, or maybe we're just going to be doing wave 1 of 5, right? that secondary thing would mean that we'd probably have a few years of rally. If it's just wave 5, we can expect then stocks and Bitcoin and whatever to top out in 2023. But if it's just wave 1, breaking out would just be wave 1 of 5, then that suggests that we could have a couple more years of upside, right? So that's what we're going to kind of look at. But if you understand what I just said about the DXY and the Euro USD and risk on assets, well then, again, when we look at the dollar here in a minute, if it's topped out, what reason do we have that everything drops? Because that money coming out of the dollar's got to go somewhere. Where is it going to go, right? If everybody's worried and afraid, whatever, it goes into the dollar. The dollar is that reserve asset, right? It is where people go when they're scared, when they're in the markets and they're scared. So if they're pulling money out of that, it's because they're not as concerned. And if they're not as concerned, that translates into risk on, right? And then you start looking at your risk on assets. You look at your emerging economies. You look at, stocks. You look at Bitcoin, other crypto stuff like that. Which again doesn't bode well for gold and silver, right? Everybody believes that those are, the dollar kind of goes up, inflationary, right? And then those things should, compensate for it, right? And head up and kind of protect the wealth, right? But, so, I mean, if that's what you think and the dollar's going down, well, guess what? There's not a whole lot of room there for for gold or silver to rally, right? But there's a lot of craziness could be happening. Again, my big thing, if you guys have not been following me for very long, my big reasoning for maybe the top not being in yet, as far as risk assets go, well, not even so much worried about Bitcoin, but as far as stocks go, is that idea that that if stocks are topped, then it's the end of this grand super cycle, right? Which is wave 5 of wave 5 of wave 5 of wave 5. Okay, so when we're getting to that degree in Elliott wave, usually what you expect is a blow off top. You expect, because it's exuberance on top of exuberance on top of exuberance, right? Fifth wave of fifth wave of fifth wave, and everybody just kind of believes it's just never going to end, right? And so you get this strong push and rally, blow off top, and then that's it. That's what we would normally expect, just because of the degree of wave that it would be. And we didn't get that, right? So as we'll look at the stocks here in a minute, the stock index, you'll see it's just kind of like this up and kind of over, kind of like Bitcoin, not a double top kind of thing like Bitcoin, but just kind of a rounded top, right? And so that doesn't seem to gel with the idea of what we would normally expect in terms of a super cycle degree wave ending, okay? And so that's been one of those things that's really been kind of biting on me that I've been talking about for a few weeks now, and kind of, making me really pay attention more to what may be going on with the indexes, not just assuming it's down from here, right? Again, I don't know, I wouldn't say that you have to have that, but it's just that generally we would expect that. So we're going to kind of look at that. For right now, as far as Bitcoin goes, if we can get a breakout again here on Coinbase, this 19,588 and 20 cent area, that should then have us looking up here toward 21,096, okay? Now, I do have a red count on here. That's just kind of the bullish count there, right? The idea being that maybe, let me kind of pull this out here a little bit more, right? So the idea that maybe we've got a 1 and a very deep 2 gives us almost a double bottom. In terms of Wyckoff, this would just be a last point of support rather than a spring, right? The spring would drop down below the swing low here. In terms of pivots on the 4-hour here, we came in sideways between the pivot and the S1. We're rallying off the S1. So if we can get a breakout above this swing high up here, which is at the pivot, that should then indicate that we'll head up higher to a new high. Just when you're trading pivots, that's generally what happens here, guys. This is stuff you're not going to get anywhere else. So, I hope you're paying attention. But yeah, so when we come in sideways between the pivot and the S1 like this here, and we hit that S1 pivot and we rally back up, if we can break out above the pivot, that's usually an indication that we're going to rally up. Okay? And so breaking out above that swing high up here, there's 25, 214 and a half. breaking out above that then says, okay, well, most likely this June low is the low. And this is 1, this is 2, and then we've got 3, right? So we'll look at that. But the other possibility is, instead of 4 being done here, maybe this is 3 and this is 4, and we've still got, finish 5 of 4 coming, right? In which case, then, I've got this as a 1, 2, and then we've got 3 here, a minimum 3 at 16,064, which is the 100% retracement, or the 100% extension of wave 1. Just kind of, the very first way you look for a wave 3, especially when you're coming to an end. This could end up being an ending diagonal here, right? And even with this right here, guys, so let's say this is this W, or let's say this is some kind of WXY here, okay? So what would that mean? That would mean this is 3, this is 4, and this is 5, right? And this is WXY, so 1, 2. This right here could be another ABC or WXY here, right? So it gives us 3, 4. And then we have a little bit lower. And so we get a 5th wave that dips down just below the swing here and does print a spring on it. Because think about it, guys. What's everybody waiting for? Everybody's waiting for this breakdown, right? Everybody wants to short in this area right here. And then right as it breaks down, right? So if we got a quick spring, a drop down below that swing low that closes back up and leaves a wick below it, all of a sudden everybody's immediately caught short. And we're talking about like basically the market, right? Everybody, right? Because everybody's waiting for that breakdown, right? So, you catch it there and you push it back up and all of a sudden they're immediately underwater and it starts rallying and they get scared because now they're losing money right away, right? So they got to go short cover, they got to go long, and that gives it all that pressure to thrust on up, right? So in terms of what we would look for Wyckoff, you get this nice, this would be that wave C or that phase C breakdown, right, into a spring. Wave D, interior markup, as we rally up, pull back, and then break out for wave E as we get that exterior markup, right? So, there's a lot going on. Just because we are where we are, first of all, doesn't mean we have to break down below the swing low. But if we do, it doesn't mean we have to go to 13 or 7 or 1,000 or whatever any numbers everybody's given. Often you think about what's the most painful thing for the market, right? And right now, I believe with everybody kind of thinking it's probably going to break down here, I think one of the most painful things would be just a dip below it, immediate rally back up, and catch everybody underwater. Catch everybody underwater. Send it the other way. Because they'll jump on quick. When that thing reverses and pops back up, they'll all start abandoning ship quick, fast, and in a hurry and rallying up, right? So these are things that you want to pay attention to, And I know it's contrary to what most of crypto Twitter does, right? Which is why most of crypto Twitter loses money consistently, right? No real risk management. And then guarantees and all this short-term mindset, right? They can't get beyond, well, I say short-term. They can't see the forest for the trees, right? So they'll take a position, just seeing one thing, and they'll refuse to understand what could be happening more locally. And so, the goal here is just to be aware, right? I don't see... Well, I've got some YouTube comments here. Baltazar. Are there other ones coming up? The last comment I have here is from Telluride. I think you guys can see that in the blue screen over this way. That blue box over here. That shows you what I see right there. If you guys are commenting something else, I'm not sure why it's not going to show up. If you are. So I apologize if you're trying to. For some reason, it's not potentially coming through if that's the case. Let me see here. Oh, yeah, it looks like I'm not getting anything showing up on this here. Give me just 1 minute, guys. Let me see if I can do this real quick. Let's see. I don't know how to do this. Let me see here. Again, I do apologize, guys. It doesn't look like that. I think Hank's right. It doesn't look like those YouTube comments are coming through. Let's see. All right. Well, just looking here, it doesn't look like we're getting anything on that, guys. So there's some kind of miscommunication, it looks like, there between the restreaming software and what's it called? YouTube. Let's see. Yeah, it says there's an error here. Let's see. What else can we do here? I'm going to pull this off. Give me here. I'm going to look on YouTube here, guys, and see what kind of comments I had there, okay? All right, I see. Hey, what's going on, ARM? I see you there. All right, let me do this, guys. Let me pull this back over here. I'm gonna try to work off both these here, I guess, right? Let me see here. Chris Baker, what's up, man? Good to see you checking in. SJC, what's up, man? I appreciate you, man. Yeah, I don't know about hopium. This is, realistic kind of possibilities that may happen. I'm definitely not saying they're definitely going to happen or anything like that. I'm just saying, listen, I've been doing this a long time, and these are the things we kind of look for, right? So when you're at bottoms, especially more major bottoms, everybody and their grandmother basically thinks it'll go lower, right? And the market rarely does that, with everybody on there. So I don't know that I'd say it's hopium. I'm not saying that's what's going to happen or that I even think that's what's going to happen or anything like that. I'm just saying, listen, in these types of areas, these are the things we look for because this is often what happens. Okay? So that's kind of what we're looking at here. Like I said, until we're breaking out here, I said this at the beginning, right? I said until we're breaking out above wave B here, we still consider that things are probably going to go down further, right? Now, once we do go against wave B, if we break out above it, okay, great. We'll have that wave 3 target, right? Looks like it's not showing up here. There we go. And so, if we can get the breakout above wave B, well, then we want to look up here, right? Now, if we can get that, then we start adding some confidence into the idea that, hey, maybe the black count may be playing out, right? But we need a breakout above wave X here. If we can do that, then that adds confidence to the idea that the black count is correct and, we're going to break out higher. So, I mean, it's steps, man, right? It's steps. It's not, there's no guarantees about anything here. And until you're getting through those levels, this is the thing about trading. It's about understanding where your validation and invalidation levels are, understanding what your possibilities are. But within those possibilities, it's not just blindly going, oh, yeah, it may go up and okay. It's like, well, if it's going to, these are the steps it needs to take. And as it progresses through them, your more confidence is added to the idea that that may be what's going on. You see what I'm saying? So, yeah, I'm definitely not sitting here, saying it's going to go up or anything like that. I'm just saying that if the black count is correct, then a breakout above wave B is going to add some local confidence here. And then we'll look here. And if we can hit this, well, now it takes us above the 4-hour pivot. So in terms of pivots, again, sideways between the pivot and the S1, like this, bouncing off the S1 and then breaking out above the pivot, that when you're trading pivots, that's what I did for a few years, just trade just pivots. When you do that, most often, that's a very bullish move. And so you would expect it to continue rallying higher. But yeah, that's just the way price action generally plays with that. It's the same idea if you're in here, right? If you're coming in sideways between the pivot and the R1. So you move in sideways, it goes to the R1, comes back, retests the pivot as support. And then if it breaks out above that R1, then you're probably good to go up through R5. At least R4. So yeah, hope that makes sense. Let me see here. LXD says COVID killed the blow off top. You agree only that DXY is not top because Euro USD is not bottomed? It's possible it has. It may have. Again, we're looking at that, right? We're trying to see, does it continue, right? Or does it not? The other important thing to remember on the DXY and the Euro USD is often at major turning points, they're going to diverge, right? So one will make a new low and the other one won't. And we often see that, when it comes to the Euro USD and the DXY. Same thing when we look at like the Dow Jones and the Dow Jones Transport. When we look at that, we look for that divergence there. Often happens at the more major areas. You'll have one will make maybe a new high and the other one won't. Same idea, sure. Let me see here. Melissa, good morning. Let me kind of check up with you guys here. About says he broke YouTube. The Hopium was referencing CT. Yeah. Sirkin, what's going on, man? Have you paid it? I hope I said your name right there. Have you paid attention to the ever-increasing volume on Binance for the Bitcoin USD pair since the previous swing low on the 18th of June? It's different than other exchanges. Looks like huge accumulation. I haven't necessarily. I don't necessarily look at that. Let me go ahead and pull it up here since you're mentioning it, though. Let's go ahead and make a copy here. Check that out. Edward Park. No, it's just the video. I don't know. Probably moving stuff, right? Probably just the angle of the camera makes you look one way and then makes you look another way. What are you trying to say, man? I'm fat. Let me see here. Esteban, what's going on, man? Good to see you. All right, what you got here? You got volume coming in. Now, see, so what I like about the volume profile here is that you're getting the volume at the lows, right? Again, you're getting these volumes at these lows. So, like here, you drop back into this support right here, right? And there's where your volume kicks in, right? Right here. You have it right here to push it down through this area, but then it drops off, right? And then you pick up again right here. But, so now you need to see follow through, right? So it's not just enough to get that volume and price action. You have to see follow through then, right? And so that's what we kind of want to see here. Can we get that follow through and break out higher, or is this it right here, We don't want to assume either way. We just want to trade, right? So if we're trading, well, we had the top, we've pulled back here. So the question is, so now if you're a trader, what you're waiting for is, do we get this breakout above, what would be what we accept, wave B or wave X here, right? Or does it break down further here? If it breaks down further here, then does it break down below here, right? I mean, this is kind of what we're watching. We're looking for our entries, right? So yeah. But yeah, so I mean, we'll see what happens. And so here's the big thing. Again, in distribution, you generally see volume expansion and candle spread expansion as price moves, right? So if this is distribution here, then what you should expect to see is candle spreads getting larger as you get down here and volume expanding. But what do we have here? All the way down here, we have volume dropping off, right? Until we get to the low there, right? Then it picks up. So this keeps me watching, because generally, if this is distribution heading down, you should see volume continue to expand as it's pushing down. Instead, you just see volume dropping off. So yeah, if you change the weekly chart, it looks much better. Let me see here. Oh, you were talking about, okay, big. Okay, yeah. Let me see what you got here. Yeah. So again, coming down through here, right? So you've got this drop. No real volume change. Do you guys notice this? Look at this. No real volume change. You have a spike of volume here on the breakdown below support here, right? And then you have a spike of volume here at the low, right? But there's really no expansion of volume. You don't have something like this going on, right? And then what happens, and then in this area here is where you have a lot more volume showing up. So again, it's just support based off these kind of candles over, these weekly candles that I've talked about before over here. And if we look at this, again, that volume kind of kicks in right here in this area. So I like it that it's there, but we have to see a reversal. We have to see a breakout above, on the weekly here, this swing high, this 22,799. We want to see it breakout through there. If we can do that, that's going to confirm the idea that there's a lot of accumulation going on down here, right? We know there's a lot of selling going on because, well, okay. We know there's a lot of selling going on here because of the volume, right? This volume, it's selling going into somebody buying it, right? If there was nobody really buying here, then the selling, the volume could be much lower and it would break down, right? But there's a lot of buying going on and selling continues to expand, right? Right here. But but it's not really going anywhere. It's still staying right here, right? And that's why I'm saying this looks good at the moment, but we definitely need to see a breakout above this swing high. If we get a breakout above this swing high here, this is on Binance at 22,799. If we can get a breakout above that, that's going to add a lot of confidence to the idea that this is the bottom here and we're likely headed up higher. Okay? But, the first part is definitely seeing the volume pick up at the bottom. They're trying to sell down. They're trying to sell. Demand isn't letting it go anywhere. The question is, does supply get exhausted or give up, or does demand get exhausted? Is there not enough demand to buy up all that? And that's what that's what you should be watching in this area. That's where we need that breakout here to say, okay, it looks like good accumulation there. Through this whole range here, and then we'll be looking for that higher up. So yeah. Hank, wash trading is zero fees, common knowledge. I don't think so. Why is it? Why is the volume expanding through here if it's just wash trading? If it's been no fees for a while, so why is it still continuing to expand? What, more and more people wash trading? No, come on, man. That doesn't make any sense. Right? So, again, we'll see what happens. But, again, same idea. Let's get over here. Same idea over here, right? Still it's not down here at lows, right? Still elevated volume. Maybe not quite as elevated, but it's a different product, right? This is Bitcoin against the dollar. The other one's Bitcoin against Tether, right? So different product. But nonetheless, still elevated volume at the lows here. So I think you're wrong. I don't think that's the reason why. That's the reason why. So yeah. But volume's going to pick up. So if it's zero, so think of this, Hank. If it's $0 to trade it, why wouldn't more people trade it? I mean, you just assume, it's got to be wash trading, period, end of sentence. Well, if I'm not getting charged to trade, I'm going to trade more often. That's the whole goal of making it $0 trade there. Get more trade going on. You see? So anyway, as I said, it doesn't. Your reasoning doesn't make a whole lot of sense. You assume that nobody else is going to trade all of a sudden. That only is going to be wash trading because it's $0 trading. Well, I think a lot more people will be trading because it won't cost them anything to do so, which is the whole reason for making it zero trading fees, right? Edward says he's thinking the 17.5s was the bottom. About a month before that, we had the death cross on the 3-day 5,200. I think I got the 5,200 here, do I? Maybe I don't. I thought I did. What you said on that 3-day? Let's go ahead and toss them in here real quick, kind of see what you're looking at here. You said the 50 and the... Oh, yeah, definitely got to be careful. Sure. The 50 and the 200. What we got here? We'll say this is the 50. Make that blue line a little bit thicker there. And then we'll say 200 is red. So that's what I usually do. All right. You talking about that up there? Yeah. Yeah, I mean, you have that there, you come on down, okay. You do have your 200 starting to curl down. You don't really have any curling up at that 50 yet. But yeah, you know, potentially, right? But again, you know, the other thing we look at here, guys, right, is all this, right? So we've got this huge move up here with the hash ribbons. So again, lime green, you know, gray means capitulation, lime green, not just green, but lime green means recovery, right? And then the next one is going to be, you know, the next one is the blue with buy. When it gets there, you've got this nice expansion here between them. You know, as I pointed out, let me see if I've got my other chart here real quick. Yeah, so as I pointed out, you know, with this chart, you know, there's a lot of similarities between the RSI here on the, this is the weekly. So between the RSI, remember the RSI has only hit oversold on the weekly twice before. That was the 2015 swing low, bear market low, 2018 bear market low. And, you know, again, you know, we had Stochastic RSI rally up, get to that overbought area, and then price pulled back, kind of went up here again, rallies up. And right here, you can't see it. There's like a 1 week wick that goes up and comes back down. You know, and then it kind of went sideways and then broke out as it stayed up, right? And so here we are again. You know, again, we get down here, we get oversold, we rally up into overbought, we rally up, we pull back, we pulled back, we pulled back, you know. So, I mean, there's a lot of similarities between it. No guarantees, of course, but, you know, we look for analogs, right? We look for things that are similar in what's going on with everything, right? If we look at this as well, so you have this green and this blue line here, right? So your green is your 50 right here, and your blue is your 100, right? So 50, 100, 200 here, okay? So 50 and 100. So your 50, after you hit that low, right? That 50 crosses below the 100 on the weekly, right? Right here. And then it breaks out, right? After that, then it breaks out, right? We're just about crossing right now. So, I mean, if we were to follow through what's happened the last couple of times here, you know, historical precedents, of course, what happens historically doesn't guarantee what's going to happen, you know, in the future, right? But until it does something different, we can look at it and go, well, if this plays out as it's done before, well, then we've got some sideways or sideways up. You know, we would expect that the bottom be in there at that oversold bar. So, you know, I mean, you know, depending on what you're thinking, there's just some things to watch, right? I mean, if you're trading, why wouldn't you pay attention to such a strong similarity in what's happened the previous two times now? What, just because you think you're a macro expert now, right? Everybody thinks they're a macro expert now, right? Everybody thinks they're economists now, right? They don't know. All they know is what everybody else tells them. They know they're scared because everybody else is scared. But here's the thing, guys. If CPI is topping out, then the Fed's topping out with its interest rate hike right here, right? This month is what I talked about back in Q1 of this year, right? When I talked about we'd probably see rates hiking up and we'd hit, you know, by the summer we'd hit those, you know, probably 75 basis point, potentially 100 basis point, but probably just 75 basis point, right? And then I said, come the end of Q3, beginning of Q4, that's this month, right? I said, I think that would probably be the top, right? The last time that we get that high bit. Now, they're still going to raise interest rates after that, but they're good, you know, but they'll do it at a lower rate, right? So let's say they hit 75 basis points this time, right? Next time, the idea would be that maybe they'd only do like a 50 basis point hike, right? And you say, okay, but they're still raising interest rates. Yeah, but to the market, they've backed off, which signals possibly a top, which then they're forward looking into 2023 as potential Fed pivot, right? And so now they've got all this kind of priced in, and they're going to start trading accordingly, right? So, you know, everybody gets, you know, it's that whole thing, guys. Up here, laser eyes, right? Laser eyes, diamond hands, spaghetti fingers, all that stupid stuff, right? All up here. Because everybody is exuberant at the top. Everybody wants to buy at the top. Down here, everybody telling you it's going lower, sell, sell, sell. Everybody gets depressive down at the bottom, right? Goes up. Same idea again, right? Now, does that mean that this is the bottom? No, it doesn't necessarily mean it's the bottom. But again, if you don't understand what's going on with the markets and how you may be emotionally tied into the markets and what's going on, then you're going to continue to say, talk about stuff that you really have no education or experience in, right? I keep telling you guys, one of the hardest things you can do is to try and figure out fundamentals, especially when it comes to terms of economics, right? Especially macroeconomics and global finance. If you don't have any real education, it's a very difficult thing to understand. And even those who do still get it wrong a lot because it's so interconnected. It's so tied in, right? It's not simple. A lot of moving parts. So, crypto Twitter is all on itself, thinking it all knows what's going on, talking about, oh, it's definitely doing this, it's definitely doing it. Look at what's going on here. Highest inflation in 40 years, and we're all going to die. I mean, that's basically the idea, right? That's what it seems to come out to, that kind of the sky is falling type thing, right? And while it may go down lower, sure, maybe, the idea that people who have no education in this are swearing this is what's going to happen should make you stop and think, guys. It should make you stop and think, right? So we'll see what happens. Again, I think there's possibilities here. And like I said, we already saw 2 months back, we saw that strong pullback in CPI, right? And then it went up a little bit last month, okay. But that may have been the crack. That may have been the warning that it's changing, right? And if it is, and we know unemployment's going up, right? We saw that's been going up. So the Fed has two mandates, right? Employment and inflation, right? So if employment's ticking up and inflation's coming down, the Fed has little to no power, or little to no support for the idea that it has to keep these big, huge interest rate hikes, right? And again, if they get to the point where they start pulling those interest rate hikes down, not where they have to reverse it just yet, but just where they just start doing it less, then that signals to the market that the Fed may pivot 2023, which means the markets will then not have that downward pressure from rising interest rates. So, again, these are things we have to watch there, guys. It's technical analysis. Look at the charts. It's so much easier to learn and to understand for most people than the fundamental stuff is, because the fundamental is a lot of moving parts, right? So, yeah. Again, and none of this here is me saying that that there's definitely a bottom here in Bitcoin, or definitely a bottom in stocks or whatever, or definitely a top in DXY. I'm saying, listen, if you're going to do fundamentals, these are the things you have to consider and what you have to look at. You can't just go blindly with the herd. And the herd includes your pundits on CNN. They're often wrong too, right? So that's what we want to be careful for there. Yeah, I think bonds may be just about topped out. They look like they're hitting that fifth wave, like fifth of fifth. They might have just a slight bit higher to push, but it seems like they're, for all intents and purposes, probably just about done. Which also leads to the idea that, hey, things are going to, pivot here in a bit. We'll see. You guys have been following me since 2018. I've nailed all that interest rate stuff for years, right? In spite of what the Fed said, right? Maybe this is a year where I get it wrong. It is what it is, right? But I've had some good years here since 2018, live here on YouTube with you guys, right? So, yeah, we'll see what happens, guys. I know the UK, the ECB over there did the big rate hike. UK is looking at it. Some others as well. And so that then would make more sense, right? The dollar came in a year ahead of everybody, right? And so they start popping up their interest rates. Fed starts pulling back on its. And so then the dollar loses value against, those ECB, sterling, Aussie. The yen itself is at that 50-year low, right? So it can't just keep collapsing forever, right? Well, shouldn't, right? So, there's a lot of things in the macro sphere that is going on right now that could potentially, over the next few months, all of a sudden, You know, everybody's screaming right now that rates are never going to stop rising. They're going to go up and all this stuff. And then 3 or 4 months from now, they'll be like, all of a sudden they'll be like, oh, well, it's doing the opposite now, right? And they'll all be act like they know what they were talking about, right? Like they were saying that. No, never want to be Fed chairman. Who'd want that job? Man, there ain't no way, man. It's like being president or head of state or something. You know, you're damned if you do, damned if you don't, right? Let me see here. Serkan, what's going on, man? You said 2015 and 18 drops stopped right about the 200 weekly MA. March 2020 low is at the 300 weekly MA. We're just holding above the 300 since June, swing low. Yeah, I mean, we're still, you know, again, over here, it dipped down and back up, right? And then dipped down and back up and kind of rode it here, right? This one, it found support on it. Found support and went up, right? We did dip below here. That was March 2020. But here, you know, we've dropped down. We've broken out back above. We've pulled back down. You know, it's kind of resistance, but also kind of holding support here. It depends. If we break out and go higher, this will be considered to have held support because we were all over. We're back and forth all over, right? Closing above, closing below. If we break on down, then we'll say considered it to have held as resistance. So it all depends on what goes on here. You know, so every time it's a bit different, right? Every time we hit that 200, it's a bit different. So yeah. So we'll see what goes on here. Let me jump over here. Do I think the DXY ever breaks the 85 high? Let's go ahead and pull that up. Let's go ahead and talk about that since you're talking about it. All right. So right now, locally, potentially topped out, right? Here, it's possible we've got ABC. I've got this in ABC. This should be a WXY. Sorry, give me a minute. Let me change this real quick. There we go. So, as we look here, you know, this is the 4 hour. We're breaking out into overbought here. RSI is almost overbought. There's not a whole lot of room here. If we break out above 110.786, that invalidates this as the top, right? And then we look at quite possibly this may be a 1-2 here, right? Which means 3, 4, 5. We head up higher toward, you know, 113, 116, 120, you know, as we kind of move up. I mean, if this is 1-2 and we go to our normal extensions, 3 is up here at 117.63, 5 is up here at 119.98, so 120 is where we'd be looking if this is 1-2 here, okay? But as long as it doesn't break out, right now, again, looking at the possibility, this is ABC here. If we zoom in a little bit closer, you'll see it. Yeah, there we go. It's right here. So, you know, A, B, C gives you A, and then B is a triangle. And then 1, 2, 3, 4, 5 gives you C, right? And then you've got this ABC, ABC, AB, 1, 2, 1, 2, 3, 4, 5, 4, 5, and C. So maybe a WXY, but nonetheless, we get done with that there, right? And then we're looking at ABC up. So maybe A, B, and then 1, 2, 3, 4, 5 gives us C, right? A, B is a flat. 1, 2, 3, 4, 5. It just has to reverse prior to 110.786. And then drop down below this wave X swing low here at 109.355. If we can do that, that's a pretty good indication that that top is probably in. This is 1-2 here, you know, and we're heading down there, right? So will it ever break the 95 or the 85, sorry, swing high here? By the way, you'll notice here that the weekly R5 pivot is right up here around 115. So we've kind of hit the R4 area. Remember what I told you earlier when I was talking about the moving in sideways between the pivot and the S1, touch the S1, break it above the pivot, and then we head up. And then I said the other side of that was this here, coming in sideways between the pivot and the R1. And we look for a rally up the R1, break down to the pivot, and then break out. But I've told you guys before that if you get this sideways between the pivot and the R1, and it continues up and doesn't ever come back to that pivot, it just breaks out above the R1 and hits the R2, then you can bank on it hitting the R4, at least potentially the R5. So I was talking about that way back when. We got that over here, you know, in March of this year. It's just continued up as would be expected, right? So we look over here to this 85, right, which is this up here. Do I think it ever will? I don't know that I'm smart enough to say that it ever will or won't. I think anything's possible, right? There are no guarantees with anything. That would be a heck of a movement. Again, this is 85, right? So this is Volcker over here, right? Remember Volcker, head of the Fed back in the 70s, getting in the 80s. The playbook that the Fed is kind of looking at now to stamp out inflation, right? Remember the 80s when we had the huge inflation? The inflation we're hitting now, the CPI numbers are, you know, similar to what they were back then, right? That's that 40-year, 50-year thing, right? So could we do that? Sure. If CPI continued to rally up and the Fed continued to be aggressive with its interest rate hikes, yeah, you're damn right. Everybody's going to put the money into the dollar, right? And so you're going to see that dollar continue to rally higher there as a result, right? So I think it's possible. Do I think it's going to happen? I think there's other things set up in the system right now, the way in which we've seen things. You know, remember this whole inflation came off the gold when we moved off the gold standard, right? Bretton Woods and all that. That led to the oil and interest rates and everything else, right? So that was all this in that decade prior to this rally. You know, we don't have anything similar to that for this decade here prior to it, right? We don't have anything like that going on. So I think maybe the extent of this here was much more a product of effects that came off of that, of which we're really not hitting here. So, you know, we'll see if we get that. But if CPI is taming now, then the Fed has no reason to continue those hikes. And if they're doing that, and now the UK and Europe and everything's starting to raise their interest rates, well, necessarily we should expect for the dollar to rally, you know, to drop, to reverse back down, right? At least for a bit, right? So yeah, that's what I'm kind of looking at there, right? Let me see here. Hank's looking at one more push up. He says 111 and a half. Yeah, I mean, and that's 111 and a half on the dollar here is, I don't think it's enough to push Bitcoin to a new low, you know, below the June low. If it does, again, I think it would just be a spring down and back up, catch the market completely off sides. But yeah, I mean, if we look at this, go, okay, 1, 2, 3, 4, 5. We get 1, 2, 3, 4, 5, right? I mean, we are well overbought. This is the week. This is the monthly, guys. I think it's hard to suggest that maybe there's a lot further to go in it. I mean, you know, if we just look previously, anything like this, you know, again, usually have some sort of pullback of some sort, right? It's a pretty good pullback here. This rally up and then the pullback there. You know, we're a lot further along here than we would be here. You know, I mean, so you look at those things, you're like, well, I don't know. Seems like it's pretty topped out, but we'll see what happens with it. But again, this is the monthly. As a matter of fact, let me see here. What is this right here? 77.91 on the RSI there. 82.87 over here in, what is that, 15? Yeah, 15. 78.16. So when we topped out up here, RSI was only there around 78.16, right? No, 82. So pretty close to where we're at now, right? A little bit further up. We could have some more upside on that. Let me see here. See how far we get these pivots to go back here. Just interested here. Yeah, that's all that goes back there. Not any further. So yeah, you know, we'll see what happens. But right now, we're coming up to what is this major resistance right here. That's what we hit here, guys. Pay attention to what we hit here. See this? That's where we're at. And so it's only gone twice above it. It was this point here, which is, you know, 81, 82 here, kind of heading up, right? And then this little sideways up here as we hit the dot-com bubble, right? You know, 01 to I can't even say it. Basically 2000, what is this? Basically 2001, just into 2002 here. Breakdown. So that's kind of where we're at there, right? Hey, what's going on? Hey, Mr. Wilkes, good to see you, bud. Yeah, you know, I don't know that things aren't necessarily looking too good. I think everybody's kind of scared, but you know, that's usually what happens at the bottoms, right? So we'll see what happens. DXY looks a lot more stable pre-1972. Yeah, Bretton Woods Agreement came out. You know, back there in the 70s. So yeah, and that took us off the dollar, or it took the took us off the gold standard. So yeah, Nevolution, what's going on, man? So yeah, you know, again, guys, the whole reason I even go through all this is just to kind of get you aware and get you to understanding that there's a lot of things that a lot of people aren't looking at because, you know, they just don't know, right? People just don't know. They'll get out there and they'll talk really loudly online and really have no clue what they're talking about, right? They're just scared and they're parroting all the sound bites they hear because they seem to make sense, right? Instead, we're going to look at, you know, what may potentially really be going on here without saying that it's definitely going to do it, right? There are no definites, right? There are no guarantees in trading, right? If the Fed does anything less than a 75 basis point hike, will that be suspicious as far as rallying the markets a month before elections? Oh, man, I'll tell you what. If the Fed does anything, I mean, if they do less than 75 basis point hike, I think you're going to expect the markets just to tear higher. Because, again, everybody's pricing in the Fed to do the 75 basis rate point hike, right? So if they came out and did 50, all of a sudden it's like, well, the Fed is saying that they don't need to be as aggressive anymore. And if they don't need to be as aggressive, then all that downside pressure with those higher interest rates, you know, the significantly higher adds on, you know, kind of is taken away now. And so the market, you know, will then start looking at, well, if they're pulled it back now, especially when we were expecting 75 with what Jay Powell said there in Wyoming there, Jackson Hole, you know, weeks back, and how aggressive he sounded, and then all of a sudden he doesn't, even after the CPI print this time. Oh man, yeah, everybody would be like, what does the Fed know that we don't know? That they're not going to follow through on that. And so, yeah, everybody would see that definitely as well, there's a chance it's going to go up here. So, Elon was calling for a 25 basis point cut? That wouldn't make any sense. To go from a couple of 75 basis point hikes straight to a 25 cut, I don't know that it makes any sense at all, really. Maybe he meant a 25 basis point hike, maybe. Which, again, you know, I know it sounds counterintuitive, guys, but because the Fed's been so aggressive here, and they're expected to be so, you know, to continue being aggressive, any kind of pullback, 50 or 25 basis point, you know, rate hike instead of a 75, is going to signal to the market that the Fed's going to pivot. And so they're all going to get ready to buy the bottom here, and then Cramer's right. It's the only thing I hate about this is if this is the bottom, then Cramer's right, and I'm not a big fan of Cramer, but you know. Oh, tell you right, you're making a joke about going off the gold standard. Got you, man. I was like, why would you be saying that? You know more than that, man. All right, guys, let's jump over here and see what else we got going on. Let's see here. All right, so there we are with all this. We kind of put it back down into the, my poor people. Look at the live chart link and just go, what the heck's he doing? Changing it so much. So yeah, we'll see what happens. We'll see if we can get a breakout here. That'll be the first kind of hint that, okay, maybe that black count's in play. Break down below here says red count probably headed down lower, new low. Let me see here. So we can look here at, let's look at oil real quick. Let's see here. Oil. Looking here potentially for a fifth wave to break on down below the third wave here. We're having a little bit of a sideways here. We're just coming off of overbought. We haven't dumped and it oversold here yet for the 4 hour. So I think, again, maybe getting this, this A, B, C thing coming down here a little bit lower. Maybe toward the S2 pivot here on the 4 hour, around $80. And then that will get us then, let me kind of zoom out here a bit. That'll suggest maybe we've got this as a 1-2 here. Now, I've got this as a 1-2. This would be a 1-2. But with the degree of decline here, it's possible this could be A and B, and this could be 1, 2, 3, 4, 5 coming down there. But if that top is in, again, I'm still looking for oil to get down below $50 a barrel. The same thing I've been talking about for a while now, right? Potentially into the 30s there. So we'll see what happens. Again, I've got this right now as a 1-2, 1, working on a 1, and then I'll have a 2. But it could be A, B, and then this is 1, 2 of C heading down, right? Let me see here. Corey, what's going on? What were you going to say that you hate about Cramer being right? Oh, no, I'm just not a big fan of Cramer. I'm just not really... I don't know. It just rubs me wrong, I guess. I don't really have any real reason, like he did something that offended me or something. He just seems to rub me wrong, it seems like, anytime I try and watch him. Just me personally, man, I hate to say, oh, man, he was right about it being a bottom there. That's all. It's just a personal thing with me. Nothing about him in particular. Let me see here. Yeah, so, I mean, there we got with oil there, right? Let me see here. If we look at the NASDAQ composite, here we're rallying off the daily S1 pivot. Again, we assume that this black count, is what's correct, right? Again, that's the idea that we've got a 1, 2, and we're working on wave 3, right? With 1, 2 coming down, right? If we break out above the daily pivot, which is where this black wave 2 is, then it starts looking like maybe this is 1, A, B, C is 2. As you see here, 78.6 retracement, right? And so if we break out above here, it starts looking like this is 2, and we're heading into 3. Minimum expected target at 15,577, right? And that gives us a wave 5 pretty close to the all-time high up here. Again, first subwave of wave, of the first subwave on the reversal usually targets the area of the other wave of the larger degree, right? So, not saying that's what has to happen, but looking at the possibilities. There's always the possibility, if this is ABC and this is ABC, well, maybe this is ABC here, right? Or WXY. So then we get, basically A, B, C, we'll get D and E. So if we continue to consolidate here, it's going to suggest that this may just be one large triangle, which again would make this wave 4, and we'd expect wave 5 out to a new all-time high. So we'll watch that as well. However, if you keep on breaking down below this wave B here at 10.850.01, then that'll add some confidence to the idea that that the black count is correct and we are headed continually lower there. Genghis, what's up, man? Hey, I appreciate you, man. Thank you so much. Corey says, okay, you got me. Yeah, I do think that Bitcoin bottom is already in, though. Too many people are calling for 10K, which sounds ludicrous to me. Well, yeah, and it does. We saw a lot of that at 3,100, in 2018. December there when everybody was talking about it was going, below 1,000 and below 250, and I think $7 was somebody said. And so that's just the first part. We just pay attention when people the market is being very aggressively one way or the other. Again, similar would have been in April or whatever when everybody was all, not me, I was laughing, right? When everybody was all laser eyes and spaghetti fingers and diamond hands and all that silliness, right? Which reeked of euphoria, right? And at that time, again, I said it doesn't have to be the top, but it's probably a top for now. And then we drop on down to that area where we dropped. And so it's the same idea here at the bottom, quite potentially. But just because we're like that doesn't mean it necessarily has to be the bottom. Don't forget, okay? I think there's a lot, I'm showing you a lot of different ways to look at it that suggest that it could be a bottom. But nothing I've showed you guys in any way guarantees that it's a bottom or anything. So as traders, all we want to do is we want to just pay attention and understand what we're looking for and then just trade from that, right? With good risk management. And that's what you should be doing. It shouldn't be any of this, it's definitely going down or it's definitely going up, because that's how you lose money, guys. I don't care how long you've been doing this. If you're doing this professionally, you're doing this to really make money and not just goof off in the market, you don't trade like that. That's silly. That's just asking to lose money, right? Yeah. As usual, Hank has to interject something in the opposite way, right? There's a pretty good case for lower. Yeah, no. I don't know that there's a pretty good case for lower. If the economy's done with and we're heading down, well, there's your case for lower, right? Bitcoin acts as a risk-on asset. It doesn't act as a store of value. It doesn't act as a inflation hedge or whatever. It's a risk-on asset, right? That's the only, case for lower that you need. And that was the same one I talked about, prior to reaching the all-time high, right? But again, with the way in which we topped out and the way in which, the stock market indexes have topped out, it leaves me curious. It leaves me not overly convinced that we're going lower, as I felt we might be prior to reaching that all-time high. But as a trader, guys, that's what you do, right? As you get new information in, you have to be ready to change what you're thinking. You have to be able to understand, well, what else may be going on, right? So we'll see, But I'll tell you what, right now, there's absolutely no reason for Bitcoin to go lower if the dollar is just about topped. I mean, there really isn't. Because again, if the dollar's topped, that means it's coming down. That means money's pulling, dollars are being pulled out and put into other things, right? What does it get put into? It gets put into risk-on assets. Bitcoin is a risk-on asset. Stocks are a risk-on asset, right? So yeah, I've been preaching the dollar as what you need to watch across all markets for, ever since I've been doing this, since 2018, since I've been doing live on YouTube, right? Same thing still today, guys. Let me see here. If oil goes to $90 USD, Europe is worried about nothing. Oh, yeah? Let me see here. All right, so let me go on here. So, yeah, so you've got basically the same kind of idea with the NASDAQ, with the Dow, and with the S&P. I usually look at the E-minis. Same kind of idea as far as the structure of what we've got going on here, right? So let me see here what I say. E-minis. Oh my gosh, let me see here. There we go. So again, same idea, right? Potentially a wave 1 down and a 2 up, right? And then we're working on 3, right? Other thought being ABC down, right? And then this becomes, as we show in red here, right? The 1 and then the 2, right? Either here or coming down lower. But breaking out above this 41.75 on the E-minis, all of a sudden that starts adding confidence to the idea that red count's correct. And if that's a 1-2, we're going to expect a new all-time high, right? And again, I don't know that it just would be 5 waves up and that would be wave 5 and done, or if that would just be wave 1 and then we have, 2, 3, 4, 5 to finish out wave 5. If it's the former, you know, we get a new all-time high end of this year, beginning of next year. If it's the latter and we got to do 5 waves up, that's just wave 1 of 5, well, then we've probably got at least another 2 years of rally overall, I think. And so what does that mean for you? Why do I say that, guys? I say that because my point to you is if we get that, you have a limited amount of time to make a stupid amount of money because it is easier to trade bull markets. It is. And so, and not that it's necessarily difficult to trade bear markets. It's just that as human beings, we tend to default to price moving right and up. Okay. So we tend to make profits easier in a bull market. So if we've got that, well, we've got that coming up, you've got a limited time to make a stupid amount of money pretty easily, you know, potentially over the next few months, if not the next couple of years. And then it's downhill from there, right? So the idea is just to give you that kind of wake-up call, that pay attention mode, because you may not have known prior to coming in, you know, where you were in terms of a market, right? Well, we've got a pretty good idea now if we're breaking out higher here, right? So definitely, you know, a good thing to watch there. And I think a lot of tech companies would be the way to go. Like I said, so many of the big tech names have been beaten down 80%, 70%, right? So they've got some good upside potential in them with it. Let me see here. Let me get this other one here. So again, looking at the Dow here, right? Once again, same idea, right? So potentially 1, 2 working on 3 down, right? And within that, it's 1, 2, 3 has a, you know, wave circle 3 has a minimum expected target of 27,258.5. But if we break out above the daily pivot here, that carries us above this point. And all of a sudden, it starts adding confidence to the idea that maybe this is a 1, 2. So this is 4, and this is 1, 2 of 1 of 5 or 1, 2 of 5. And so that's kind of the magic area we're going to watch. Now, if we break down below the swing low here, and this is on all of them, that swing low in the Dow here, it's 29,653 and 29 cents, or 0.29. If we break down below that, then that invalidates the bullish count. The other possibility, again, is maybe if this is an ABC coming down, which, you know, we would assume it would have to be if this is a wave 4, right? It could still be a triangle playing out. So A, B, C, we'll get D and E. So if we see continued, on all these, if we see continued consolidation in waves of 3, that's going to suggest this is a wave 4 triangle, and then we'd look for a thrust out higher to break out to a new all-time high. Okay? But again, if we're breaking down below that June swing low for everything there, then that'll suggest that, you know, again, this is likely a 1, 2, and 3 headed down. I just think it's real important right now with the possibilities going on that we don't just assume, you know, that things are definitely... You can trade it down lower without assuming that it's going to go down. You see what I'm saying? You can continue to trade this down. There's nothing wrong with that. That's the proper way to do this. But you have to understand where your validation and invalidation levels are so that you don't continue to trade it down when that downside is invalidated, right? And you got ideas of what may be going on here. So we got a couple different possibilities that could be going on. You know, it does look like it could be, you know, ABC, 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 right? So we'll see if we continue to get some consolidation there, make triangles pop or not. Let me see here. Silver, you guys know we've been looking for that turnaround here for a bit, right? And we got some off the bottom there. It's possible we've got 1, 2, support of the daily pivot. And we've got 3 waves down here. So this could be 1, 2 right here, ready to break out and head higher, right? So if we're breaking out above this swing high right here at 19.600, without making it, you know, with 1, 2, 3, right? Not 1, 2, 3, 4, 5, but just 1, 2, 3s we have here. If we just rally from here and break out above that, then we should be looking up higher. Wave circle 3 as a minimum expected target of 23.005. okay? And then we'll see how it plays out from there. Gold, is pretty much the same way, right? So here we are with gold. Gold potentially, though, doing this flat correction, right? So ABC, this wouldn't be 5 up. This would have to be like a A, B, and then 1, 2, 3, 4, 5 here. I just haven't changed that since we got the breakdown here the other day. But it would be ABC up, ABC down, and then 5 up for wave C, right? Locally here, we're just kind of consolidating. If we break down further, we're looking at the S1 pivot here, right around 1648. If we can break out above the pivot, then we want to see a breakout above wave B. So basically a breakout above the daily pivot. And that should have us going up here at least to 1887, right? Remember, big picture on gold is this. Remember, this is the one where Peter Brandt back over here was all excited saying that it held here and that we were going up. And remember, I told you guys I got a little... You guys, some of you guys, not y'all here, but some of the people that follow, too funny. But, gave me a lot of heck about it, right? And yet here we are breaking down again till you look forward, right? So I've been heckled for years now about the idea that this may be some sort of top around here, right? And coming down further, people still continue to laugh, but it's done nothing to suggest it's going up higher, right? So we'll see what happens here. Ultimately, we at least get down probably to this 13,000 area, 13,000 area. If we get that, that's likely a running flat here. Then we rally up. If we can break down through that, though, this continues to be an expanded flat here. So A down, B up, and then C down, and we should be looking around this, this 8,900 area down here, most likely. Same thing I've been talking about, what was this? 2020, so since 2020, right? About it coming down like that. We nailed the upside. It went a little bit higher than we thought. I thought it would stop prior to the breakout here, but it broke out a little bit higher. But nonetheless, looking at ABC, ABC, and then 5 down. So we'll see. And if we get that with gold, and silver should be hitting, $8, $7, $6, somewhere right around there. And I get a lot of arguments about, oh, no, there's all this and that going on, and the supply and blah, blah, blah. But, again, we're looking at futures here, guys. We're looking at paper, right? So we'll see how it plays out. Nothing's changed, though. Nothing has happened to change anything I've said about that over the years here yet. As a matter of fact, it continues to be more correct than not, right? So we'll see what we can get out of this. And again, me saying that is not to say, oh, I'm great or whatever. It's just to say, listen, people get too caught up in their own ideas of what must happen rather than understanding it's just what could happen, right? Nothing has to happen. Price is going to do what it's going to do. And a lot of one of the biggest ways we lose money as traders is that we assume that something has to happen. Okay? So I don't, you guys don't need to get caught up in that. Because spoken as somebody who did get caught up in that when I first started for years there, you lose a lot of money doing that. And you're always confused because you convince yourself that something has to happen when it doesn't, right? So, again, we got a lot of different things going on here. Again, the idea that, with what's going on with gold and silver, what's going on with the index, what's going on with Bitcoin, what's going on with the dollar, what's going on with interest rate and bond yields and all this kind of stuff, right? So I hope that maybe you can see there is the potential for it to do something other than what, Crypto Twitter and FinTwit swears to you it has to do, right? Again, we're not saying it's not going to go down further or that things aren't going to continue what they're doing. We're just saying, hey, listen, we're smart enough to realize that it doesn't have to do those things. And here's the reason why it may not. And because of that, here's the levels we're watching to kind of start giving us confidence that it is or isn't happening. That's what trading's all about, guys. Okay? Stick with the technicals on the chart It's a lot easier than trying to figure out the fundamentals. Like I said, a lot of people get paid a lot of money to talk about fundamentals and get it wrong a lot of the time. I always talk about it as an aside. My ideas are usually based on the chart, and then I explain. Okay, well on the fundamental side, if that's what's going on with the chart, then this is what it would mean as far as fundamentals go. But again, I have a certain level of education in it and experience, right? So I've got something to draw from. But again, my analysis comes from the charts, right? Just because it's just easier, guys. You don't have to understand all the fundamental stuff. If you learn to understand the charts a little bit better and, of course, use proper risk management. DXY new high today? Potentially, we'll see. We'll see. I gave you my argument earlier. ABC up here, come back down, could be A, B, 1, 2, 3, 4, 5. I don't know. I think we might have a short wave Y here. Let me go ahead and draw it in here. We'll get this flat, right? So A, and then A, B, C is B, and then 1, 2, 3, 4, 5. So as long as we don't take out 110,786 and instead reject it prior to that and drop down below wave X here at 109,355, if we can do that, that would suggest this WXY wave 2 is done. It was a deep wave 2, but deep wave 2 here, right? Deep wave 2 here from September to here, right? Bitcoin deep wave 2. Not here, not from September here or over here, right? But over here from June, right? Way over here. Potentially a deep wave 2 here. So we'll see that a lot of times. Remember, the whole idea, if we think about wave psychology, especially in trends, as we get to the end of a trend, the wave, if there's a reversal, then wave 1, the market says, oh, it's a dead cat bounce, right? If the price is going down. It's dead cat bounce. Look, it'll go down. And then it gets rejected, right? So remember, that's what they were saying here. Dead cat bounce, blah, 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 right? And you get up there, and then it starts coming back down. They're like, oh, yeah, see, I told you. Look, it is. And it comes down, and then it gets here, and it rises back up. And they start getting scared, but they put on that brave face, right? Oh, it's just a dead cat bounce again. It comes down, and now they're feeling themselves, right? They're like, oh, I'm in public on crypto Twitter, and I'm announcing, oh, that I'm right, that I'm right, that I'm right. And then it gets here, right? And they say, okay, yeah, it's definitely going to break down, right? And that's just the general market psychology, right? That's what they believe is going to happen. And it isn't until it goes back up and breaks out above that wave 1 that they go, oh, crap. I was wrong. And everybody starts scrambling because they didn't take any profits, right? They could have got in up here, great trade to go short there, didn't take any profits anywhere. Then it's all the way back, and now they're losing money. It's a whole psychological effect on the mind, right? And that's why wave 3s are usually so dang strong, because that's when the market goes, oh man, we're wrong. And they all jump in to cover their shorts and they go long. And that's where you get all that strength in the third wave. So, again, that doesn't guarantee that the bottom's here and this is 1, 2, but I'm just saying often when you have those reversals at the end of trends, it looks a lot like this. Crypto Twitter tends to think that it's supposed to look like this. You come to the end of a trend and you spike back up. Most of the time, it looks like this. There's a range. All right? Schrodinger's count bounce. It's both dead and alive, and you can't tell until you open the chart, October 1st. All right, take care, man. Tell you right, man. I appreciate you, buddy. Anyway, all right, guys, so there you go. That'll do it for today. Man, oh, man, hopefully I have the office set up a little bit better for Friday. As always, remember, the only thing you control in the market is how much you lose. So please keep working on that risk management. And, we'll see what goes on here, right? Again, it's not about knowing what's going to happen, because you rarely ever know, or close enough to know. Usually when you do, you're wrong, right? The goal is just to understand what's possible and where you're looking in terms of your validation and invalidation levels. The important thing is we don't go long for $10,000 on the 5-minute chart, right? So those are the things, guys. I appreciate you guys showing up. As always, you can join us over there at howtotradetowin.com. We'd love to have you there. I've got a free link. Elliott Wave International has a free resource on there. One of their courses that they're letting you use for free. You don't have to use a credit card or anything to get it for free. But you can jump in there on Twitter, or if you're in our server, even on the free side of the server, you can go up to the announcements section. The link's in there as well. But take advantage of that, guys. Don't miss out on that stuff. It's free. It's good information. Hopefully it'll help you, see the charts a little bit better, right? All right, guys. I hope you guys have an amazing day, amazing week. Trade safe out there. Remember, don't enter a trade just because. Always look for those ones that have that higher confidence chance, right? All right, guys. Y'all take care, and I will see y'all there on, Friday, right? 11 a.m. Central Standard Time. Corey, I appreciate you showing up, man. Everybody else as well. Y'all take care.